Welcome everyone to ANCAP Radio. It's now time to introduce Inside the Vault from our friends at Strategic Wealth Preservation, the expert in everything to do with precious metals investing. Take it away, guys.
Welcome to Inside the Vault with SWP. Join Mark Yaxley as we explore the latest news, reports, and some bullion basics for investors old and new. Let's get to it.
Happy Wednesday, everyone, and welcome back to Inside the Vault with SWP, a weekly show where we dive into the world of precious metals and precious metals investing. If you've joined us before, thank you for your support. If you're a new listener, welcome to the show. You can find all of our previous episodes on the ANCAP Radio Twitter account or posted to the SWP YouTube channel, along with a ton of other precious metals related content. While you're at it, check out our Inside the Vault series on YouTube, which is one of the most viewed channels about precious metals investing on the web. We are incredibly excited to expand Inside the Vault into podcast form through ANCAP Radio. So thank you once again to ANCAP for having us on today. I'm your host, Jeremy Varlow. I'm excited to be with you again today. We've got another great show lined up. We are joined later by metals and mining analyst Jeff Clark of The Gold Advisor, a site devoted to providing individual investors with education and useful guidance on precious metals and the stocks that mine them for maximum protection, and profit. The best part of all this is the information is 100% free. Jeff will join us shortly, but before he does, Mark Yaxley is back with me after a week away at the LBMA Precious Metals Conference in Portugal. Mark, before we get into your weekend or your weekly update, tell us about the event. What happens at the LBMA conference? What were you up to?
Actually, Jeremy, this one was a private wealth conference in Portugal. So a little bit of a more bespoke niche event, but basically we were speaking and presenting to about 100 advisors and trying to spread the good word about gold and why it should be included in a well-diversified portfolio.
Well, see, there you go. You got such a busy schedule these days. I can hardly keep up with where you're at around the globe. But good to have you back in the saddle with us. Why don't you take it away with your weekly market update?
Sure. So the obvious news over the last week for the price of gold and silver is that we did see them cool. Gold had briefly surged above $2,000 an ounce in early November. We saw that price pulling back as investors sold off positions and demand for the yellow metal slowed. Despite Israel's continued incursions into Gaza, the war premium, as it's being called, associated with the conflict has peaked. The war has been priced into the market. So although the conflict does provide geopolitical support for gold and silver prices, it is no longer acting as a catalyst for higher prices at the moment. Instead, all eyes have now turned to the core CPI numbers, which were released yesterday. They came out flat, below market expectations. And this proved very positive for all metal prices. Gold was up 1% on the day, silver up 3.5%, platinum up 2.5%, and palladium up 3.5%. So, very good result, I guess you could say, for the metal prices. What's even more notable, though, is that the precious metals sustained these numbers after their post-number rally. So basically what that means is generally when the market reacts to news, there's an immediate reaction, but a lot of the time we'll see those early, positive numbers kind of retrace as the day goes on. But gains were actually held quite nicely into the close, which is constructive for the longer term pricing for gold and silver. And of course, what's next for gold will really continue to depend in part on the Fed's moves heading into 2024. A higher for longer outcome signals a flat to lower gold price. So basically, the sooner that interest rates start dropping, that should be positive for the gold and silver prices. So I think the table is actually set quite nicely for metals, as that is the market expectation that the Fed will start lowering their rates in the coming months.
Thanks for that, Mark. Yeah, you mentioned that wartime premium. We obviously had a little bit of as you said, it seems like we've found maybe a little bit of a floor in the near term here, which sets us up very well moving forward. I want to interview with our guest as he certainly has some insight on this. Without further ado, let's bring in Jeff Clark. As I mentioned, Jeff operates thegoldadvisor.com, which is a fantastic mining of gold and silver with great resources and commentary on the site. And as I mentioned, it's all for free. And on top of that, Jeff has recently released a new book called Pay Dirt, Mining for Profits with Gold and Silver Stocks, which we're going to talk about as well. Jeff, welcome to the show.
Hi, it's great to be here, guys. Can you hear me okay?
We can hear you loud and clear.
Great. Okay. Yeah, thanks for inviting me.
Yeah, it's good to have into things. Before we do, I think the best way for us to set the stage here is to talk a little bit about your background, because it is quite extensive and it runs through the family as well. So your experience, which led you here today as one of the most respected voices when it comes to the metals mining sector. Tell us about that background and kind of your family history in the industry.
Well, it all started when my dad retired early, moved to California, and went gold panning. And from the very first time he saw that little gold nugget in the bottom of the pan, he got hooked. And this became sort of his second life, if you will. He became a full-time prospector. He didn't work for a company. He worked on his own and eventually with a group of guys. Our family had claims, gold claims or mining claims, I should say, in California, Nevada, Arizona. So he really went after this. And his biggest find was a 3.5 ounce nugget. It was beautiful. It was actually woven through some really bright white quartz. So it was a beautiful thing. And he actually dug it right out of the ground. So, some of this obviously rubbed off on me. I went on trips with him. I didn't like doing dry sluicing, which is where you're digging in the dirt just at a prospective site and putting it in, shoveling it into the sluice. It can be backbreaking work. So, and it's kind of like fishing, right? You never know what you're going to find, So anyway, I was more interested in investing, and it's another story we probably don't have time for, but I eventually got hired at Doug Casey's firm. Lobo Tigre, if you know that name, was actually my mentor there for many years. We worked together hand in hand running the metals division. So I loved it. I've since worked for multiple bullion dealers, multiple newsletters. Went out and started my own at thegoldadvisor.com because the Twitter handle was, pretty successful. So I really wanted to be on my own and do my own thing. And now I love what I do. I get to write about mining stocks and gold, but 90% of the site is devoted to mining stocks, and it's mostly about discovery. You'll see our logo on the site is a prospector holding up a gold nugget he found. So, anyway, that's what I'm doing now. And, I wrote the book because a lot of people kept asking me, when I wasn't working for an actual mining newsletter, well, how do you pick your stocks? And, at the time I said, well, look, I'm just too busy to really do that, write a book and go into that. And then COVID hit. So I kind of lost that excuse, right? Because you couldn't go out and couldn't go anywhere. So I sat down, turned the nightlight on in the office, and started outlining a book. Took 2.5 years, off and on. We decided to hire me an editor, which was actually a good friend I worked with back at Doug Casey's firm. And the book really was transformed at that point into something that was a lot more entertaining and actually fun to read in parts. You can read a sample chapter on the website, the scariest mine I've ever been in. So if you're claustrophobic, I will warn you. So, but the book eventually got done. We invited 16 other people that I interviewed about how they pick mining stocks. And that's in the book as well. So it's not just me, it's 16 other people that have been very successful in the industry. So it just came out in paperback, so you can buy it on Amazon, or the link is on our site as well. But it was a lot of work, but I'm really glad I did it. I think it needed to be done. And I can tell you that, I can't guarantee you'll get rich from doing it, but I can guarantee that you will know 90% more than what the average retail investor out there knows. You can actually take this book and pick your own mining stocks. That's exactly what it's designed to do. So, and it's relatively fun to read too. So,
yeah, that's the part that jumped out to me. Is that last part is, you mentioned in the description of the book on Amazon, it says it's very fun to read, and it piqued my interest, and I'm really excited. Mark, if you're listening, let's pick up a copy and add it to the growing collection of books at the new SWP office. I think it's a really interesting conversation that we have here. Obviously, we speak to a lot of people that are in the metals industry, but I think this is the first time we've ever had someone with experience, digging their hands into the dirt on the mining side of things and the prospecting side of things, which is great. Before we kind of dig more into the mining and metal specific stuff, I just wanted to get your thoughts on the current macro environment that Mark just mentioned in his market update. What are you looking at, with everything that's going on geopolitically, with monetary policy, just macro in general? Inflation, deflation is a debate that's quite a hot topic. Recession's on the table. Where do you think we're at, and where do you think we're headed?
Well, the big issues, as it pertains to gold, the big issues have been the U.S. dollar and the Fed's rate hike cycle. Both those appear to be slowing or stopping. And so those, factors would be definitely bullish for gold if the U.S. dollar continues to fall, or if the Fed is done raising rates. I think they're probably done. It would really hurt the markets pretty bad if they did another raise at their meeting in December. But who knows? But anyway, those two things are bullish for gold. And by the way, it's very interesting. There's a study out there that went back and looked at how long it was between the Fed's last rate hike until their first rate cut. And believe it or not, actually, I'm going to ask you guys, can you guess how long it is on average since the 1960s between the Fed's last rate hike and their first rate cut? How long do you think that time period is?
I'm not much.
I'm gonna guess 6 months, Jeff. I'm probably wrong.
No, it's actually 5 months. You're basically right. On average, since the 1960s, it's only 5 months since their first rate cut after the last rate hike. This is going back, all the way through modern history. I was shocked when I saw this. In fact, there was no time period that was over a year. So if they're done raising rates, we're going to see the first rate cut in 2024. And that, of course, would be, bullish for gold. By that point, we'll be in a recession. They may resume money printing at that point. So, these factors are very bullish for gold. But again, in the big picture, those are short-term things, and I hate that we have to, pay attention to what the Fed does. I don't think there should be a Fed, or at least they should be out of the markets. Let the free market decide, what the rate should be. But anyway, in the big picture, it's more of a financial monetary issue, and that's what a lot of people have talked about, including Mike Maloney, that I worked for last year and many years before. That's the thesis: is that the monetary system, as it stands now, is unsustainable, including the debt. Everybody talks about the debt, and now it's the interest payments on that debt that is now over $1 trillion annually. That's how much they have to pay every year on the interest on their debt. And it's probably going to go higher. And it would go higher if they raise rates more, right? But it's going to go higher because the debt is going up, A, and B, a lot of this, a significant portion of that debt has to be refinanced within the next 12 months. Well, it's not going to be refinanced at zero. It's going to be refinanced at 5, 6, 7, 8%. So that's going to raise the payments even more. So can they really afford to raise rates just on that basis alone? I mean, it's kind of, insane. They might need to see a therapist or something to think that they can actually raise rates in this environment. So, um, the financial system is unsustainable. That's why I own gold. Hey, when we have a more stable, honest financial and monetary system, hey, I don't need to own as much gold. I can reduce my gold holdings to 5% or something. But we don't have that. We have the exact opposite of that. And we don't have politicians that are responsible. Gold is the uh, responsible choice when you have irresponsible politicians. So, in my opinion, you need to have a weighting of 20%, maybe 25% of your entire portfolio weighted in physical metal. And I'm happy to say, I'm proud to say that part of those holdings for me, are stored at SWP.
Well, thank you for that plug at the end there. Appreciate that, Jeff. I want to kind of dig into your thoughts on metals given this macro environment. You kind of touched on it a little bit there. You're a proponent, and this is on your website quite a bit. You say metals first, then stocks. I'd love to get your thoughts on that. But let's start with gold. So you mentioned to me the other day that gold was trading just shy of $1,700 this time last year. We've recently touched $2,000 in the last, 3-4 weeks, despite the macroeconomic conditions that we've been facing. So, explain that metals first, then stocks philosophy. And then, if you can, tell us where you think we're headed in the next, say 1, 3, 5 years for gold prices if those, monetary policies ease up a little bit.
Sure. The reason I pointed that out to you, Jeremy, is because it doesn't feel like gold is up, that much year over year, but it is. The reason it doesn't feel that way is because, well, we're kind of stuck at this level and we feel like gold should be higher, right? Because we're surrounded by catalysts and it's not really breaking out. And of course, the mining stocks have just been decimated, especially the juniors. So you add all that up and it just doesn't feel all that positive, even though gold is over 10% higher than it was this time last year. Um, but yeah, I devote some time on the website and in the book to making sure people understand that you have to own physical metal first. That's your defense. It's football season, so this is gold is your defense. You have to keep politicians from getting in the end zone with their irresponsible spending, right? So that's your defense. It will protect you basically from any fallout that could come our way. And then your offense, of course, is the mining stocks. But you can't have just offense. If you play just offense and you don't have a defense, the other team is going to score all the time. So you have to have a defense, and that's what physical gold is, and that's what it does. And I know some people might defer to ETFs. I understand, or maybe that's the only option they could do in a retirement fund or something like that. Some owning some form of gold is better than no form of gold. But I would definitely favor physical metal when you can over an ETF. Depending on how big, bad things get, these ETFs could, they have counterparty risk. They carry counterparty risk. And so you're taking a risk if things get really bad that those paper products cannot maintain, the price, or they have to raise the premium or their costs, or it doesn't rise with gold. So there's some risk there that I would prefer not to have in that kind of environment. So, but again, in the big picture, I think you have to own gold. So that's where I'm at. I don't
Yeah,
think I
that's
answered
great.
all of your question.
What's that, sorry?
I don't know if I fully answered your question. So if there's
No,
something
I
else.
think I think that that certainly suffices. And I mean, I don't want to. This is a shameless plug, but just you mentioned retirement accounts. There are ways to invest in precious metals, physical metals, through your retirement account, through your IRA. We had the team from Preferred Trust come on a couple weeks back and talk about it. If you ever have any questions, anyone in the audience, please don't hesitate to reach out to us and we can help you get set up there. Let's move on to the other big metal, silver. I know you've been historically bullish on silver. Just want to know what your outlook is on the silver metal right now.
Well, when you look at the DNA of silver, meaning you go back and look at the price behavior, one thing becomes very clear, especially if you put the silver price over the past 50 years into a log chart. In other words, just the percentage gain and not just the price. And when you do that, you realize, oh my gosh, there's a bunch of periods where silver is just flat. It doesn't do anything, it doesn't go anywhere, despite having catalysts. Pardon me. And then all of a sudden, out of the blue, seemingly, it'll go in a spike. It'll go in a run, and it'll ignite, literally overnight sometimes, and just go on this big run. So what you have is, and what I've termed this at conferences I've spoke at is silver. The silver price is boring, boring, boom. That's what it does. It has long periods where it doesn't do anything, even when it's surrounded by catalysts, like we have now. So it's in a boring, boring period. Well, history says the next period is going to be a boom. It's going to be a big spike, and those spikes are significant. The average spike, when I went back and measured them since the early 1970s, the average spike is 50%, 150.4%, something like that. The average spike. And a lot of these spikes happen very abruptly and they're short lived. They only last for about 7 months. So, for a 7 month period on average, you have the silver price more than doubling. Some people were critical of that, like, oh, Jeff, you're including the 1970s. So, I took out the 1970s and the gain was still over 100%. It was like 101%, something like that. So essentially, you have the silver price doubling or more when it goes on a run. That's the average of what it does. So there you have silver's DNA. So that kind of explains where we are now, that we're in this flat, boring period where it's not doing anything, even though, we feel like it should be. This is actually historically normal. But I'm excited about silver. I own more gold than I own silver, because it's the king of metals and it protects you in recession and that sort of thing. Silver does not typically rise in a recession, but I own it because it's going to be explosive at some point. And it's such a small market, as this audience knows, that just a small amount of volume above the norm coming into it can really ignite the price. So investment demand is the big determining factor there. We've had strong physical demand, but overall investment demand has been flat too. In fact, investment demand in the ETF products is actually down. That's where the institutions and funds go. They don't buy silver eagles. They go to a paper product and will make large investments. So when that turns around, that's when we'll start to see the price ignite. But I fully expect that. History tells me that. I'm going with history, and history tells me that there will be another spike in silver. We just had one in the COVID bounce. Gold and silver sold off dramatically. You still there?
Yep, we're here.
Oh, okay. I got a buzz. Anyway, we saw a huge bounce in silver, 140% in 5 months in the COVID bounce from March to September of 2020. I actually, I'm not beating my chest here, but I made a lot of money in that bounce, both on gold, silver, and the miners. When it sold off, and remember the gold silver ratio went to 123. I mean, it hit all new all-time highs throughout hundreds and thousands of years of history. It's never been that high. And when it sold off that much, I jumped into the market. I bought silver twice, and at the bottom of that market, and or near the bottom, and it was very profitable because I just didn't think that this is something that could last, and there indeed was a big spike. So that was the last one. That was 3 years ago. Um, I fully expect to see another silver spike in 2024. We have every reason to expect that based on history, based on catalysts, based on black swans. And not to go on too long, cut me off if you have to, but I measured all the crises going back to the 1960s, and I just started listing them. And I realized that half of them, roughly half, were black swans. They were events that people weren't expecting. And how many people expected the pandemic, a global pandemic, for example? So that tells me that given the embedded risks in the system, in the market, in the economy, with the Fed, all those risks that could rear their ugly head. It could be something next year that nobody's really expecting. But you know what? I don't have to predict that. The only way you can really be prepared for that is to own a big chunk of physical gold. And because I own gold, I'll be prepared for whatever that is. If it's something everybody expects, or if it's a black swan. I might lay my bets that it's a black swan that happens next year that ignites gold and silver. But it doesn't really matter. I don't have to be right about that. I just have to own gold to be prepared for it.
Yeah, it's the old time in the market is better than timing the market, and Mark mentioned it a couple of weeks back about these times right now are the best times to buy, is when things seem relatively boring price wise. Dollar cost average in, and it's better not to miss the boat. You want to jump on it and get your seat and get comfortable. So yeah, that's great. Thank you very much for that, Jeff. We've only got a couple minutes left, but obviously we touched on your book, we touched on the website. Your background is really in the mining industry and in how to invest in it. Maybe you can just give us, a very short primer on how people can use the resources in both your book and on your website to get into the mining investment world, and what you think some of the best practices are there.
Well, we do have a tab on the site, and again, you're right when you mentioned that everything is free. Everything is free to view the portfolio. You do need to create login credentials to view that, but it's still free. But we have a tab on the site about criteria, and that's basically the three legs of the stool: the people, the property, and the politics. If you just use that formula and you weed out every company you look at that doesn't meet all three legs of the stool, hey, you're already ahead of the game. But of course, the book goes into a lot more detail than that. And I'm serious when I say that, if you read the book and take it into account and follow it, you'll be ahead of the game 90%. So you'll have a lot more winners than you will losers. And you will have some losers. That's just inevitable. It's mining. You're unsure. So, but everything is there on the website, thegoldadvisor.com. Again, it's all free. You can check it out. You can buy the book there as well. But I have to say, just to wrap up, I really love what I do. I get to talk about gold all day and gold stocks, so it's my favorite topic, and I love what I do, and hopefully that comes through to everyone who follows the site. We have a daily newsletter. We call it an almost daily because we report whenever there's company news. If there's no news, we don't report. When there is, we update our comments on the site and blast that out in the newsletter and on Twitter.
That's awesome. Thank you for letting us know about the newsletter as well. And I think we should definitely have this conversation again in a couple of months in 2024. We'll have you back on. It's been great to chat to you. For those that are in the audience listening, definitely go check out thegoldadvisor.com and also Jeff's book, once again, called Pay Dirt: Mining for Profits with Gold and Silver Stocks. Jeff, really great to have you on the show. And like I said, we'll be doing it again very soon.
Yeah, let's do it again in 2024 because I think, my best guess is that's when something's going to happen. Something's going to break, something's going to give. And I think we'll be a lot happier this time next year when we do a follow-up podcast.
Yeah, that's great. We'll definitely be reaching out in the near term. Jeff Clark, thank you very much for joining us today.
Great to be with you guys. Thanks.
All right, that brings us. We've actually got a few questions from the audience here. Let me just see. All right, bringing them up. All right, so first question for Jeff for you. You're still there. Okay, great. So we've got I am no one on Twitter asking, I have 300 ounces of gold. Where do I park this if I convert it into metal? It's currently in an ETF.
Oh, that's a great question, and that's a lot of metal. That's great. With that much metal, I really encourage you to consider diversifying where you hold it. I have my metal stored in 3 different places. I don't keep any at home anymore because I'm in the public eye and I don't want someone knocking on my door at 3 a.m. I actually have a dummy stash of coins here in a bag on my desk so that if I do get robbed, oh no, please don't take that. So, but I would encourage you to diversify. So, consider putting it in different places. You can keep some at home if you don't tell anybody about it and only one, trusted person knows about it and where it is. So don't hide it all in your home. If you're not in the public eye, you can keep some there as long as you don't tell someone. I'm not trying to plug SWP, but Mark will verify this. I was customer number 1 at SWP because I really believed in the product. I really did. Mark sent me a list of questions of, what would you like in a storage facility if we're starting one? I gave him a whole list of everything, and they instituted every recommendation that I had. And so I was immediately on board. So yes, I'm at SWP. I like having the fact that it's, offshore. It's out of my political jurisdiction. So you might consider, keeping some out of the political jurisdiction that you're in. But not all of it. You don't have to keep it all there. But I would keep some there so you have an outlet in case things really get bad. But the point there would be to diversify it where you store it.
That's great, actually. And you helped answer the follow-up question to that as well. So we got a 2-for-1 there. I believe that's all for us questions-wise. Jeff, want to thank you once again.
Great. I loved it. So talk to you guys again soon.
All right. Have a great day. All right. As always, we like to finish the show with our weekly Bullion Basics segment hosted by Mark. Mark, what do you have for us today?
Hey guys, it's the perfect subject, I think, following up on a lot of Jeff's comments. A question that we get quite often from our clients at SWP is, which metal should I be buying? Should I buy gold? Should I buy silver? And for some of us who have been investing for a long time, we definitely own both already, but I totally get the question, for people who are just getting into the market, if I had to pick one, which one would it be? So here's my kind of Bullion Basics advice on picking the right metal. And I think Jeff did a fantastic job of speaking to this. So I'm kind of just summarizing some of his talking points, really. So generally speaking, the gold and silver prices do trend in the same direction. If you look at kind of a long-term chart for gold and a long-term chart for silver, even a short-term like intraday trading, the two metals tend to be, either doing well in the same direction or they're doing poorly together. However, it's very important to note, and Jeff touched on this, silver's reaction to market news tends to be much more exaggerated than gold. Yesterday was a perfect example. The CPI came out, gold went up 1.1%, and silver was up 3.5% on that same news. So in other words, silver's price is much more volatile than gold's, and that's true both in a good market and in a bad market. You need to be aware of that. It's not only on the upside. Long term, I do think there's a benefit of owning both in your portfolio, and here's why. Gold is the pillar. I think Jeff referred to it as the king of metals, and he's absolutely right. It's a pillar investment. in any precious metals portfolio. It's steady, it's predictable, it has long-term appreciation. There's a ton of benefits to owning gold in your portfolio. For me, silver is the trade. This is like if I think there's an upside or there's a good market coming for precious metals, I'm definitely loading up on silver because I think it's going to appreciate dramatically under those, bullish market conditions. But the same is true again, like I said, it will depreciate just as fast in a bear market. And you can always buy it, if you want to get a little bit, if you want to play the markets a little bit and make silver your trade, you can buy and sell silver positions based on market conditions because there is enough upside there to do that. Whereas with gold, short-term trading gold and making money is actually, kind of tricky. So to boil that down, I'd say like a 60-40 or 70-30 gold silver split with the opportunity to come in and out of silver when the market conditions are right. That would be my advice for people trying to decide, gold versus silver.
Awesome. Thank you for that, Mark. With that is all for us today. Thank you to everyone out there for listening and to ANCAP Radio for partnering with us. And lastly, to our guest, Jeff Clark, for joining. Go check out Jeff. He is The Gold Advisor on Twitter. Also check out his website, thegoldadvisor.com. And then lastly, his new book, Pay Dirt, Mining for Profits with Gold and Silver Stocks, is available on Amazon now. And as always, for more information on precious metals investing, you can visit our website at www.swpcayman.com or the Strategic Wealth Preservation YouTube channel. Until next week, stay safe and happy investing.
Thank you for listening to Inside the Vault, the podcast that opens the door to precious metals. We hope you learned something new and enjoyed the show. See you next time on Inside the Vault with SWP.